Up next, we have Perianne Boring back on the stage, founder and president of the Chamber of Digital Commerce, and Richard Johns from the Structured Finance Industry Group. Thank you.
Thank you. Richard, thanks for joining us at the DC Blockchain Summit.
Thanks for having me.
So give everyone a little bit of history here. The Chamber and the Structured Finance Industry Group have been working together for quite some time, but it was just last month that we finalized our partnership and formalized our partnership with SFIG. Richard and I have made commitments on behalf of our memberships to collaborate and to also educate each other's memberships on each other's industries. Richard, tell us about SFIG, the Structured Finance Industry Group, and what your membership is like.
Sure, and maybe I'll try to do the 30-second education on what securitization is. Normally, we're sort of sat in front of a bunch of structured finance people, but with you guys, I'd ask you to maybe picture a credit card, where somebody might have $1,000 as a balance and they make a payment with that $1,000 of principal. Really is not very meaningful in the scale of the economy. Take 1 million credit card providers and look at that $1,000. Suddenly you've got $1 billion of principal payments. And loosely speaking, for those who are not too aware of what securitization does, we take those million customers, put those principal balances into one trust, and now you have a sizable cash flow that can be used to now sell a transaction as collateral to a bond that we will sell to institutional investors. How that helps the economy is really to allow you to sell it directly to the institutional investors, who generally demand a lower yield than a bank might have done. So if you're old enough, and I'm old enough certainly, to remember, sort of the 70s and the 80s, where you had a 29.99% APR on your credit card, securitization was what helped drive those rates down to a $5.99 or a $9.99 promo. So we represent that industry. We try to protect that source of funding for the economy, and therefore we don't necessarily represent one group or of individuals. We look at the banks, the issuers, the investors, the services, the rating agencies, the trustees, the accounting firms. All of those participants in the industry are who we try to look after. And our goal is to basically work on policy and advocacy work and education initiatives to support the industry as best we can.
Within securitization, there is a lot of complication that goes with those amounts of transactions and the trustees and all the stakeholders. What do you see as the biggest pain points for not just for the industry, but for your members as well?
Sure. I think generally speaking, the biggest pain points are regulation. It's fair to say that there's a number of types of regulation that impact the industry. There's market-facing regulation, loosely speaking, where you'll have a regulation that sort of comes in between an issuer and investor, whether that might be making sure you've got the right amount of loan disclosure. How do you accommodate that in a way that can give sufficient transparency of data to an investor community, but protect the proprietary nature of the business model for an issuer. We spend a lot of time on those kinds of regulations, risk retention, all kinds of things that are market impacting. And then there's a second type of regulation, which are generally things outside of the market, which don't necessarily impact the direct transactional element. Those would be things like the amount of capital that a bank has to hold on its balance sheet, the amount of liquidity they have to hold on their balance sheet. So I think those are generally, regulation is definitely a pain point. I think then just trying to find ways when we're talking about lowering APRs to the to the economy as a whole and providing lower cost of funds, just looking for those efficiencies in the market and the transactional process is something that I would say, I don't know if it's a pain point. I would just say it was maybe an ongoing challenge that the industry has faced since day one.
Mm-hmm. Well, what about from a technological perspective? What kind of issues do you see? I know in one of our briefings that we did, You told me about your experience at Capital One, and one day you guys woke up and there were millions of dollars that you weren't sure where they were supposed to go or who they belonged to. How does that happen?
Yeah. I mean, I wouldn't say necessarily we didn't know where where things went. Please, I don't want anything getting back to Capital One from that. But I think it's yeah. What's
I think they're here as well.
But I think it's fair to say that it's a fairly it's while what I said in terms of taking a number of credit card accounts, putting them in a trust, and getting a lower cost of funds, in principle, is very simple. And if you understand that principal times interest rate equals interest paid, there's not a lot more conceptually beyond that as to how securitization works. But recognize you're slicing and dicing cash flows here. You're putting a million loans or more than a million loans into a trust. You need investors to be able to come in, look at those loans, understand how those loans have been underwritten, understand how the loans get pulled together, how the cumulative cash flows relating to those loans in terms of interest paid versus principal paid will get allocated into a transaction, because when you look at a transaction, it's not just one investor coming along and buying a deal. You've got a number of investors buying a senior rated piece, maybe AAA, then you may have a single A rated tranche, then a triple B rated tranche. And so you have quite a complex structure of, if the cash goes in here first, where does it go after, where does it go first? Who gets first call on that cash? Who gets second call? Who gets third call? What if we run out of cash? Where does that cash go then after that? So you tend to find that while the concept is very simple, the structure is incredibly complicated. So you might have a document that you can identify the key terms in 10 pages, but it takes 1,000 pages to actually document the pure contractual element to that. So getting that documented, understanding how that's going to work, getting a common consensus between investors, issuers, rating agencies, accountants looking to comfort the data, and making sure everybody is on the same page is, I would say, a challenging and cumbersome process that is always open to increased efficiency.
I think that's a perfect segue into blockchain. And blockchain is a new topic that SFIG is beginning to explore. But in your role as the executive director of this organization, which, by the way, represents over 300 banks?
Yeah, we have about 350 financial institutions and support organizations, which translates roughly into about 12,000 individuals actively engaged with the company.
So you have a very good feel, but also understanding of the different types of financial intermediaries throughout this entire process. And it was really you and your leadership that recognized blockchain as a potential. What was it about blockchain that really made you want to start investing and researching and pushing this with your membership?
Yeah. So, I mean, I don't know if I'd call it leadership. It might be the dumb ex-banker, that's been taken over by technology too many times in the past, and maybe I learned a lesson or two along the way. I think it's very natural, I think, in any industry, when you see technology coming at you to first, it's like the 7 stages of divorce or whatever, or drinking or alcoholism. The first one is always denial. Right, so you're like, oh no, that's not going to impact me at all. So I've learned my lesson, I think, from that when you deny technology and try to pretend it doesn't exist and move forward with your job, ultimately what happens is technology is going to happen. You can't avoid that. Since the Industrial Revolution, it's been something that is inevitable. And so at a very high level, I just simply wanted to make sure that our membership, all participants in the securitization industry, weren't taken unawares by the technology, and those that embrace it early are going to end up winning as a consequence of that support. So that was kind of goal number one at a high level. At a slightly more detailed level, as I highlighted, we're talking about securitization, which is a longer word for that is asset-backed securitization. So we're taking loans, putting them into a trust, and then issuing a security off the back of that. So where you hear a lot of talk around how blockchain can impact the securities world and the financial markets, in this case, you have a double impact because we have assets at the front end that are going into the trust and securities coming out of the back end. So it's very natural to think that, and in between, you have massive contracts. So you look at just the element of blockchain and smart contracts, there's a very natural way that maybe we get a 2-for-1 or a 3-for-1 impact if we invest our time in it. And then at a very, very detailed level, it really is getting into all that nitty-gritty of the contractual and the cash flows and the slicing and dicing and how you can potentially diligence and attach, a sort of underwriting criteria, attach those to the loans as they're originated. So when they then pass through into the trust system, investors can see a lot more and have a lot more transparency into the actual underlying collateral that's supporting the transaction. So, that at a third level of detail, that appealed to me as well.
This is actually the third event Richard and I have done together. We did a briefing at the DC Blockchain Center in 1776 last year, which was also a packed house. And we did an event, your event was just a couple weeks ago in Las Vegas. We like to think this event is big, but the SFIG's conference is massive, and you held a blockchain university. It was the first time you guys had done this, so this was really set up for bankers and financial institutions. And Jason Brett from the Chamber went, and we sent some of our members. So how was that received? Tell us about it. What kind of feedback are you getting back?
We got a lot of positive feedback, and I'll actually say it's probably more nerve-wracking sat in front of this audience, because I don't understand blockchain as well as I do securitization. So, we had, just to give people context, there's probably 80 panels with over 300 speakers at SFIG Vegas. If you've seen The Big Short, where they had that clause, let's go to Vegas, that's the conference we're talking about. But look at it in a positive light. We have an opportunity to deliver low cost of funding to the economy. But in all essence, it's no boondoggle. There's over 10,000 individual issuer and banker meetings that go on while we're there. For blockchain, we did a 101 on the Sunday. We then did a plenary panel, which is open to about 800 people, and then 4 specific blockchain university classes after that. The goal here is to confront that denial, right? The more times we try to hammer it home to our industry, at some point, I think every time you have a panel, there will be more and more structured finance people getting that epiphany, suddenly going, okay, I get it. Now this is something that I need to get involved with. So by doing it at a plenary level, you hope to get the epiphany with the people who have never been introduced to it. And by doing it at the detailed blockchain university level, where we could go into a little bit more of the sort of intricacies of some of the ideas that we're thinking about for structured finance, it allowed those who'd already begun to sort of get on the train to get a little further advanced in there. So we got good, positive comments about just doing it and the fact that we did it in various degrees of detail. Plus, I think the fact that we were sort of trying to build bridges between structured finance and the tech world, I think received a lot of positive reaction as well. So thank you for coming, by the way.
Well, and just to continue to hammer it home, we have also co-authored a white paper, and there's a screenshot of it here on the screen. Applying blockchain and securitization and opportunity for reinvention. We put this document together in collaboration with Deloitte, and it's truly to serve as a resource for the Chamber's members who, on the blockchain side, could learn a little bit more about structured finance and start thinking about how the solutions you're building could potentially apply to Richard's members and vice versa.
And I would encourage everybody to take a look at that. We attempted to write it at a level that if you're not aware what securitization is, you can still read it and get a good understanding as to where the potential interaction with blockchain could be. And of course, we wrote it so that our members would hopefully be able to get an understanding of how blockchain works. Now, no one's going to become a subject matter expert overnight, but definitely, I think it's on page 24 or 25. We not only did we work together, but obviously Deloitte were a very big supporting partner in writing this. They've done a fabulous diagram that highlights a lot of the process flow in securitization and jumps in and starts pointing to where there's some real specifics where blockchain could potentially come in and serve a meaningful role. So I definitely would encourage people to take a look at that.
And Deloitte brought copies, but I heard they're already all gone. We also put a one-pager in your tote bag as a reminder. When you get home, you can download it. It's on our website, and it's also available on SFIG's website for free. Okay. Thank you so much, Richard.
Thanks very much.